with me, like you introduced already, the Vice Chairman and the Managing Director of Kotak Mahindra Bank, Uday Kotak. Now, this is a Davos regular interview, and it helps us get our bearings right in Davos in terms of what the mood is in the global economy and how people are perceiving India. I'll hand it over to Mr. Kotak with my first question. On the big story here is what's going on in the Eurozone, Mr. Kotak. That seems to be one of the key challenges to the global economy this year. What would you list as you think are some of the biggest issues that the global economy is facing this year?
You divide the global economy into four parts: the US, Europe, China, Japan, and you keep India for a separate discussion on after these points.
Sure.
On the US, the view is a significant benefit to the US consumer post low oil, and the US economy doing well in 2015. And sometime in second half, the U.S. Federal Reserve interest rate cycle moving forward.
Right. Do you think that move by the U.S. federal rate, as many people now expect will happen, will be a cause of great volatility, at that point in time?
I don't think at the starting point, but depends on where it goes from there. The first 25 basis points will be something markets are very much ready for, but it's a trend and the trajectory after that which will determine how the markets and the global economy takes it. Going beyond US, if you come to Europe. On Europe, the view is a very slow and sluggish Europe, but Europe is benefited by low oil again for most of the consuming countries, and also a depreciating euro.
Yeah.
The general view, and I'm always worried when there is a consensus general view, but the general view is by end of 2015, US dollar, euro 1:1.
Parity, yes.
So if we get closer in that direction, that is a significant depreciation of the euro, and that should help Europe. The biggest beneficiary, of course, by far, is going to be Germany. And on Russia, I think Russia is hurting because of oil and gas, but is going to become an exporter in many things. And with a weaker ruble, it could be, we would see exports from Russia in certain items even into India.
That's interesting, because that is by far the more optimistic view of Russia that I've heard through the course of the last day and a half.
But I think Russia is going to have a tough time, undoubtedly. But it will have to sell, and there is a significant currency adjustment which has happened. Yeah.
In fact, the question I've been asking most economists I've been speaking to here is Russia on the verge of a default? And while many have said, no, that's not the case with government debt, you might see some default in corporate debt because of the pressures that the ruble is putting on businesses. Many people do believe that Russia is on the brink of great difficulty.
Russia is on the brink of difficulty, but keep in mind Russia also has a sovereign fund. So it has got some firepower to hold on for a while. Therefore, it's bad news for Russia, but they would be exporting other things besides oil because of a much weaker ruble.
Yeah, fair enough. Okay, China?
On China, the
slow growth rates.
Yeah, the China again, the view is clearly slower growth, and the central bank governor of China was there, and I attended or heard him in one of the sessions. And the sense I got is China is working towards a soft landing of a slower growth rate carefully. And my view, therefore, is China's 6.5% growth rate about a year from now.
Okay. I'll come to India in just a bit, as you pointed out, and we'll treat that separately. But what you're pointing to me is a year that is sluggish, as you said, and maybe also a year that is decisively the beginning of a sort of super down cycle in commodities? Or was that last year and we're seeing, sort of a bigger dip this year, or that super down cycle playing out now?
Again, a very interesting session on geoeconomics of oil just now, and the sense is oil has structurally changed, and we will see lower oil on a structural basis.
Yeah.
Most of the oil producers would like to see oil at around $70 to $80. No one is talking any longer about $100. But my sense is oil from 40s by end of the year could be higher, but probably lower than the 70s and the 80s.
Okay, and that's always good news for countries like
That's
India.
correct. But India should not plan on the basis of oil at 40 or 50. Our plan should be oil somewhere in the 60s as our base case.
Okay. The other big trend this year is going to be, for the first time in a few years now, divergent monetary policy action, right? So we'll see the ECB continuing on a loose monetary path, as will the Bank of Japan. Maybe the PBOC will step in to regulate growth in China. But the Federal Reserve in the US will look to start raising rates. Do you see these crosswinds adding to the volatility this year?
I think volatility will be high. The big question is, what is the size of ECB QE? At 500 billion, the sense I'm getting from some of the bankers, they feel it's a tad low.
Yeah.
Their base case is around 700, 750, and a trillion euro would be an overreaction. Therefore, somewhere between 500 to 700 billion euro could be the kind of QE which the market would be comfortable with.
What does this mean for business leaders sitting in India, currency volatility on the rupee vis-a-vis the dollar, vis-a-vis the euro, because Europe is a big trading partner, foreign portfolio flows coming into India?
On portfolio flows, my view is because of the impact on sovereign nations, particularly the oil-producing sovereign nations, the total size of the portfolio flow, the total pot for the world may be a little smaller, but India will get a larger share of a potentially smaller pot.
2014 was a good number,
Yeah.
but it wasn't a record number, especially when you look at, the key events of 2014, right? We had just the year before that, Raghuram Rajan take over as the governor of RBI. We had the big election. We had Narendra Modi come to power. We had a record run in the stock markets, and yet portfolio flows were not record breaking. Do you think they will stay at the same levels in 2015?
See, I mean, again, the mood here is India is back in terms of being a structurally strong story. Therefore, if Indians do not get too exuberant, the world recognizes that India is doing a lot of stuff which is right, especially on the whole oil deregulation side, including diesel deregulation. So the view is India is structurally a strong story. It is now India needing to bat properly to win the match.
Okay, let's talk about India then. When you said, as long as Indians don't get too exuberant, what did you mean by that?
What I mean is, there have been times in our history, particularly in 2006 to 2008, when I saw a number of Indian businessmen getting a little too exuberant. And I would rather want our Indian team to play a long test match rather than a T20.
So you mean exuberance in terms of diversification, in terms of aggressive acquisitions?
In terms of believing that we have arrived. I would much rather see this as a long-term game where we build on our strengths. We have got the wind in our favor. The structural Indian story is stronger. This is our time to win the marathon, not a sprint.
Is the structural Indian story looking stronger or actually stronger? In terms of private investment picking up, in terms of, savings picking up. These were all bugbears of the past few years.
Macroeconomic stability is significantly there. And both on the current account and on the fiscal side, I'm sure the space given by oil, by increasing taxes on oil and energy, you start making sure that your fiscal deficit over time is in much better shape. Therefore, if you've got the macroeconomic stability in place, the key thing is how do you spur savings and investments. And this time around, I would love to see India making more roads before getting more cars.
Fair enough. Are you in agreement with what the government has done with regards to the increase in taxes on fuel? I get the context that tax collection is low, that the government is going to struggle to meet its 20% aggressive tax growth target, and that there is a fiscal deficit commitment that they've made. But would it not have been more beneficial in the medium term if that money went into the hands of consumers?
No, Menaka, you got to keep in mind, if you just let the prices of end produce drop to say $45 or $50 basis, and then you see by end of the year oil back at 65 or 70. I mean, you can't be as volatile with consumers. You much rather therefore keep that stability vis-a-vis the consumers and do that adjustment through your tax account.
So you're in favor of what the government has done?
I am in favor of what the government is doing and pass on smaller benefits to consumers and improve the macro fisc
once and for all.
How is the health of corporate India looking to you, Mr. Kotak, at the beginning of 2015?
I think corporate India, again, you've got to keep it in two separate parts. There is one part of corporate India which is over-leveraged, and there's other part of corporate India which is in good shape. And I think this time around, we're not going to get easy, quick solutions to excessive leverage. And I think there has to be a fundamental fixing of the structure of balance sheets of companies. And we are not going to paper over like we did in 99-2000.
What does that mean for asset quality for banks such as yours? I mean, yours is you know, a good number.
No, my sense is first principles first. In any corporate finance, the equity owner takes the first hit before the debt owner. So if we keep this principle, I think we will get the right answer.
That hasn't been the case so far, so I'm guessing you're hoping that there will be a U-turn.
Just focus on the right structure.
Okay. Your earnings that you just reported a day ago suggested that corporate loan growth has picked up. Is this a quarterly phenomena? Is this a Kotak phenomena? Is this an across banking industry phenomena? How do you see it, and what does it tell you
about? I think the loan growth which we are getting is much more in the area of working capital and also in some of the mid-corporates situation. We are certainly not seeing any growth in new projects or new project finance.
So that continues to be the big area of concern, because that's where so much money is tied up.
But there is, you really need to fix the savings and investment story. And this is, in the next 12 months, this is what India really needs to fix.
How will this get fixed, Mr. Kotak? It's a vicious circle. Till you don't get companies unlocking the cash in stuck projects, they're not going to be able to make more new investments. Until that doesn't happen, growth will not.
But I think this time I would love to see new winners in the infrastructure and project space compared to the names we have seen in the past.
But which new winners will come up in like a span of a year or two?
Trust Indian entrepreneurship, trust institutional frameworks. Just look at the whole digital space. You're getting a whole host of new players who are ready to dilute equity for institutional ownership. That's the model. A high institutional infrastructure ownership to the extent of 60 and 70% promoter ownership, I don't think is a model which will work for infrastructure.
Okay, one could argue that, saying, but you need to have a certain track record to bid for infrastructure projects, and I'm not really sure how much of what you're saying will come to pass in the next 12 months, maybe a medium-term solution. I'm still stuck with the bit on we aren't getting projects to move, as you pointed out.
But my views, don't be impatient. I think the cycle will work as long as we do the right thing.
How long will it take?
In my view, at least a year.
A year more. So last year when we were standing pretty much at the same spot, I think you estimated at that time that it would probably take about a year and a half. Now you're saying it could take another year. What I'm trying to say is that
I see progress by end of 2015.
By end of 2015 on the projects that are currently stuck.
On the broader savings and investment cycle.
Okay, but incremental improvement, or
I think it will be incremental improvement this time around. The improvement will be gradual, steady, but more sustainable.
Okay, one factor that will contribute to that, as corporate India keeps reminding us, is interest rates. We seem to have had a surprise cut in interest rates. I say surprise because many people were surprised at the timing of the cut, not the cut necessarily. What is your expectation of the trajectory of rates and where they'll go from here?
We've got to keep in mind the US Fed rate action sometime around the second half of 2015, plus a continuation on expectation of moderate energy prices, and based on that, my sense is 75 to 100 basis points total cut in calendar 2015, which means a repo rate of around 7% by end of 2015.
Okay, the RBI has recently, and I was en route to Davos when they did this, where they've changed the rules by which banks could fix their bank rates, if I'm correct. If you could talk me through what the implications of that are.
My view is RBI has given flexibility to banks but increased accountability. Therefore, whatever is the basis you do it, make it sustainable and make it logically justifiable. And my personal view is it will not dramatically change the way base rates are calculated. Having said that, my sense is we will see base rates come down probably by end Jan, early Feb.
Because that's one of the other complaints, and I know Lata talks about this very often, saying why aren't banks on their own reducing rates? Why wait for the RBI to send out that signal when you can do so on your own, especially for public sector banks?
I think transmission will happen and happen soon. The issue which banks need to worry about is the debt capital markets are taking away the creamy layer of corporates, because banks' base rates are significantly higher than the bond yields.
Okay, fair enough. So that's where most of the fundraising will take place,
Absolutely.
so to speak. Okay. Is India quite the toast of Davos? When I came here this year, I was expecting after 3-4 years of India being pretty much nowhere in Davos, that this year India will be the toast of Davos. Everyone's talking about India, but there seems to be this lack of conviction. Am I right in gauging
No,
that?
I think the various people I've met in the last 6 to 8 hours are certainly getting more positive about India structurally. But there is so many things happening around in the world that yes, India will be better, but the structural global deflation and Europe issue is engaging the minds of people a lot more. You
think the equity markets have run ahead of themselves? We were just, the last few days, have seen a runaway
rally. I mean, it is pretty clear that the economy, while the trajectory is gradually up, it's not a hockey stick. Therefore, a gradual gradient on the economy. My personal view is March 2015, GDP growth of about 5.3%, and March 2016 around 6%. I mean, I'll be delighted if we touch 6%. So we have a very gradual gradient up because of a deflationary world. But in that context, of course, if GDP growth is going to be more gradual, it has to have some impact on earnings growth. Therefore, markets are probably working with higher PE ratios because E may be smaller than what is bargained for.
Essentially, you are saying in simple English that markets have outrun the potential for growth, right?
But
we are overvalued at this point.
But markets,
at 8,700 on the Nifty,
but markets over time will either take a breath or earnings will catch up.
More likely the first than the second?
In the short run, it's the power of money.
Okay, fair enough. I want to come now to your ongoing merger with ING Vysya. I know you've already spoken in great detail of it. A couple of questions. Where are you in the merger process? How much longer to go? When do you think you will be one unified bank? If you could just update us on that.
Yeah, I think we made our announcement, as you recollect, on 20th of November.
Yes.
And we've got the shareholders' approvals of both the banks on January.
Overwhelming approval.
Overwhelming approvals of the shareholders of both the banks on January 7th. We are in the process of having made our applications to the Competition Commission and to the RBI, and we are hopeful, and we can never sort of give you exact timelines on these because these are processes.
Sure.
We are hopeful that we complete this, say, by end of March.
By end of March. I think that's what you've said earlier as well, so you're maintaining that timeline.
That's as it looks right now, but we have to watch how the progress goes. Okay.
There was one concern that seemed to come up in our conversations with analysts, and that had to do with the quality of assets at ING Vysya, and whether once you all are a unified or a combination, whether that will impact the overall asset quality. Can you talk us through what your view is on that?
On that, Menaka, is consistent with what I said on 20th of November. We've had the advantage of having done a thorough due diligence of ING Vysya Bank, and we genuinely believe that the swap ratio post due diligence is fair to all the stakeholders of both the banks.
No, I get that. I'm not saying no, but do you expect that post-merger your combined asset quality numbers will look a little lower than what the Kotak asset quality numbers are because of a lower asset quality at ING Vysya?
I promise to give you a full update post the first quarter after the merger.
Okay, fair enough. How is bank profitability looking to you? I'm not talking about FY15. I think most people have sort of baked in what they expect. But FY16, we've seen bank stocks as one of the best performing stocks in the stock market in India. Bank profitability?
I think this is a time for banks and financial services to look at the India opportunity from a marathon lens. This is a 10-year opportunity. And it's just amazing that how much there is to do over this period consistently over time. And if you think about India's GDP growth and add inflation to it and take a nominal growth, that is GDP plus inflation and whatever mix you take over time, and take the nominal growth at around 12%, we feel confident that we can grow around 2x nominal growth over the long haul.
Long haul is 10 years?
We would like to believe, because
the
concentrated India diversified financial services model has very strong legs to run for the next 10 years.
Okay, but FY16, FY17, a profitability outlook?
You just got to, you got to see how the economy moves, okay? But rough and ready, if you believe nominal GDP growth, which is real GDP plus inflation, and banks being leveraged institutions should be able to grow at 2x, especially keeping in mind the industry structure of Indian banking, where 75% is public sector banks, 25% is private sector.
Okay. Jan Dhan Yojana is one of the things that the government has been very happy happy about the success of which. What has it meant in terms of what kind of response you all participated in?
We have participated. Having said that, I must say the outstanding work done by public sector banks, private sector banks have done, but I think public sector banks have dramatically performed. I think the key challenge for all the banks is, for all the accounts open, how are we going to ensure that there are balances in those accounts and transactions begin to happen.
Right.
So I think we have moved to the first step, where it's a huge victory for inclusion, for the large number of accounts which have come into the banking system. The challenge for banking system begins from here.
But have we really covered 99% of the households in the country? I mean, it just seems quite phenomenal that in a couple of months we could do that.
Obviously the system has the data, but the opportunity is huge. The challenge to work on it begins after getting the account, because you need to make sure that there are balances, there is transactions, and inclusion in reality happens.
Okay. Mr. Kotak, final question. What are you looking forward to most in Davos this year?
The thing which I'm looking forward to most in Davos from the point of view of the message is deflation a worry, or the central bank political and structural actions which will be taken, including currency movements, which will prevent a deflation, particularly from Europe?
All right, fair enough. I suppose we'll get the answer to that one only next year. So we'll check back with you next year when we meet again. Thank you so much for speaking with us, and thank you for speaking to CNBC.
Thank you very much. Thank you very much. Thank you.